Good morning, everyone. Well, it's risk on as Ukraine fears fade further. European data once again outpaced U.S. data, but the market hardly noticed. Eurozone service sector PMIs were revised up, with a composite Eurozone PMI approaching a 3-year high. And Eurozone retail sales showed the sharpest month-on-month increase in nearly 13 years. On the other hand, the U.S. service sector ISM fell, and within that, the employment PMI collapsed. It's now below the 50 boom or bust line. Plus, the ADP report also came in below expectations, even though the previous month was revised down. Yet, U.S. bond yields edged higher, as did Fed funds expectations. Are the weak U.S. data once again being attributed to the weather? The summary of the Beige Book mentioned the weather 25 times. And as a result, expectations for tomorrow's non-farm payrolls are being revised down. The new forecasts are generally in the 120 to 130K range, as opposed to 150 to 180K for forecasts made, say, 2 weeks ago. That may make for a weaker dollar today, but it lowers the hurdle for the dollar tomorrow, for the dollar to outperform. As for currencies, it seems to be back to risk on, as I said. The yen and the Swiss franc lost ground, while most other currencies gained against the dollar. The euro was the noticeable exception. Euro-dollar is basically held steady. The market's probably hesitant ahead of today's ECB meeting. While the preliminary Eurozone CPI for February was slightly higher than expected, which takes some of the immediate pressure off the bank, the important thing is that the 2016 inflation projections will be introduced at this meeting. If these projections suggest that inflation will still be undershooting the ECB's 2% target on the 2-year projection horizon, then the ECB is likely to have to ease policy further. Comments by the ECB members suggest that the most likely measure that they're going to take is just to stop sterilizing the holdings in its securities market portfolio. Frankly, that move is probably already discounted in the market, so if that's all they do, then I think Eurodollar is likely to rise on a sell the fact response. As usual, attention will focus on the press conference by ECB President Draghi after the announcement of the rate decision. There's also a Bank of England meeting. It's likely to be another non-event. All economists surveyed by Bloomberg unanimously expect the bank to keep its policy unchanged, as do I. As for the indicators, we get factory orders for January for both Germany and the U.S. German factory orders are forecast to have risen in January, a turnaround from a fall in December, while in the U.S. they're expected to fall, but not by as much as they did in December. From the U.S., we also get initial jobless claims for the week ended March 1st. They're forecast to be down a bit, but if you look at the 4-week moving average, it would probably be left unchanged, which means no impact. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.